Welcome to Lawline with your host, David Schnerman, an accomplished entrepreneur, attorney, and legal educator. Each week, Lawline will bring you the most knowledgeable experts in the field of law, business, and education. And now we introduce our guest and our host, David Schnerman.
Hi, welcome to Lawline. Today we'll look at the Federal Reserve and the role it's played in our economic recovery and the viability of the institution itself. Our guest is Joseph Salerno, a professor in economics at Pace University and academic vice president in Ludwig von Mises University. Hello, Professor Salerno. How are you?
Hello, David.
Thank you for being on the show on this. It's a very timely topic of what's going on in the economy.
Yes, it is.
And how the Federal Reserve has played a role in that. If you look over the past decade, our debt limit has increased from $6 trillion to over $14 trillion, and we're looking to raise it again. In 2008, we spent $1 trillion in the TARP program, and more money probably than we know, and the Federal Reserve did that in a rather fast pace. My question is, how long can this continue, and really, what is the Federal Reserve's role in this?
Well, the Federal Reserve is enabling the huge deficits and the continual increase in the debt and the pushing for the raising of the debt limit. If we were on a gold standard, for example, there would be no way to finance those continuing deficits without raising taxes tremendously, which we know is very unpopular. So basically, the fact that the Fed can print money pretty much out of thin air at will is the enabling factor in all of this.
What does it mean in layman's terms? What does it mean to raise the debt limit? How do you raise a debt limit? Where do you get that money from?
Well, it's actually prospective money. It's money that you're going to have to borrow in the future and in the present. And as a result, when the government does borrow, it issues bonds. Now, the government going into the market borrowing all that money would drive interest rates up, and it would really reduce the amount of mortgages available and the amount of funds available for business investment. So to prevent that from happening, what the Fed does is it goes into the market itself and buys the bonds. So it, in effect, prints money.
Where does it get the money to buy the bonds?
That's a good question. I work at Pace University, about 3 blocks away at the New York Fed. There's an open market trading desk there, and every day they go into the market and they have an auction in which they purchase bonds from various banks and so on. Now, where do they get the money to purchase those bonds? Well, they're legally empowered to simply create reserves out of thin air. So they can write checks on themselves, in effect. It's actually done all electronically, but think about them writing checks on themselves and then paying the banks. So if the bank sells $10 million worth of bonds to the Fed, it now has $10 million of reserves that it may loan out to you and I. And when that money's loaned out, we then have an increase in the money supply and all the other effects of inflation and so on.
When the Fed creates money out of thin air and loans it to the government for bonds,
right.
Do we have to pay interest to the Fed for that money?
Let me just step back for 1 second and then answer your question directly. It doesn't literally create money and hand it over to the government for bonds. The government issues new bonds to the banks and others, the public, that purchase those bonds. And the Fed goes to the open market and purchases from entities in the market itself, that is, bonds that have already been issued.
Sure.
And whether or not we have to pay interest on that, yes, the Fed does collect a tremendous amount of interest, possibly $40 billion per year, the last time I looked. But much of that is rebated to the Treasury, and it keeps what it needs for operating expenses.
Let me ask you what seems to be a simple question, but might not have a simple answer. What is the Federal Reserve? Why was it created, and who are the shareholders? What is it?
Well, the Federal Reserve is a government entity. I mean, it was created by an act of Congress in 1913. It began operations in 1914. It was created allegedly to prevent what was called currency crises at the time, which meant that when the banks began to loan money, at times they would create inflation through loaning money, and at some point, as the money became a little bit tighter, businesses would begin to default. There was no FDIC back then, so there would be a run on the banks. People would try to get their deposits out.
I've read that the shareholders of the Fed are actually private institutions or private shareholders or banks themselves. Is that correct?
That's true. They're the member banks in the district of the 12 regional Federal Reserve banks. However, they really have no power. They don't have the same power as shareholders. They get a fixed dividend every year, however the Fed performs, and they don't have any voting power. They don't appoint the boards of the regional Federal Reserves.
So the purpose of the Fed is to control, from what I understand, is to control interest rates. The main purpose, at least as the public understands that. And by controlling interest rates, that controls how much money is in the economy. Is that correct?
Well, actually, it's really reversed. I mean, people talk about as if the Fed can control interest rates directly. So that's something that it can't do. Okay, what it can do is, as I said, increase the amount of reserves that the banks hold. At that point, if the banks want to loan that money out, they have to lower interest rates to induce people to borrow those additional funds.
There's increasing the reserves and then lowering the, you always look to see, are they going to lower it by a point or half a point?
Right.
Isn't that lowering and raising the interest rates?
Well, the Fed goes into a very narrow market, or actually targets an interest rate in a very narrow market. It's called the Fed funds rate, and that's the market in which banks loan money to each other overnight.
But isn't that what, when you look on the news, everything is based on what the Fed is going to set that narrow market interest rate?
They focus on that interest rate, but that's not always a good a sign of what the Fed's actually doing. Okay, what you really want to look at is what's happening to its balance sheet, what's happening to the amount of assets it's buying. Because when it buys assets from the private market, as we know, it increases bank reserves.
From what I understand, during the 2008 area, they increased their balance sheet, or they increased the amount of assets they had up from maybe $1 trillion to $3 trillion, and they just kind of created all that in there. What is that causing part of the problem?
Well, yes. I mean, what they do is they more than double their balance sheet. It may have been 800 billion, and it went to 2.2 trillion or something like that. That is money now that is in the banks. Much of that is reserves that the banks are permitted to loan out, and for various reasons, lack of confidence, the fact that the banks didn't see good lenders out there for the first few years, that money was not loaned out. And also the fact that the Fed did pay 0.25% interest if the banks held those reserves in deposits with the Fed.
So trying to get it less technical, because some people are just trying to understand, what's going on right now. Is the Fed, in your opinion, is it helping? Is what it did in 2008, was that a beneficial move by putting $1 trillion into the economy? And so I'll stop there. And just before we move on.
No, I don't think it was beneficial. What I think it did was it prevented market adjustments. Look, asset prices, financial assets, as well as housing prices, were far too high compared to prices in general and to people's incomes. Those had to come down. I mean, that's what a correction of a bubble means. You allow the bubble to deflate. And in fact, we found out just today, it was released today or yesterday, that the housing prices continue to drop, and they're almost dropping. I think going back a year now, that's the biggest drop we've had in maybe 2 or 3 years in housing prices.
So they put over $1 trillion, a lot more, into banks and wherever else they put it, private institutions, without really much of the public's knowledge. So the question is, what's done is done. What do we do from here if you don't think that works? Do you have an idea of how to get out of this mess from your perspective?
Yeah, well, one thing that we have to allow to happen is that some of these institutions still are shaky and still should fail. I mean, what the Fed has turned itself into is really a sort of a central planning board aiming investments at weaker institutions. So they're diverting money from more productive uses, which would create jobs, to uses that will not create jobs. We're creating an economy like Japan's in the 1990s, where we still have very high unemployment, and we're beginning to see bubbles again in land prices in the Midwest, in commodities prices. All of this tells me that there's going to be inflation in our future, as well as a grinding sort of unemployment.
You mentioned the word inflation. That's a topic I really like talking about with individuals. I talk to a lot of people, very intellectual, very smart. I ask them a very simple question. Right. I say, can you tell me what inflation is? They start telling me all these complex answers, and I say to myself, if these people don't understand the simple answer of what inflation is, we're in trouble. So can you tell me what the simple answer of what inflation is?
Okay, the definition of inflation is a general rise in a sustained and general rise in prices. A rise in prices that continues over time and affects almost all markets. That's the present day definition, has been since the 1930s. But the key is that that can only really be caused, according to many economists, not all, by an increase in the money supply.
Correct.
Because once you increase the money supply, some people get it before others. And those people are the lucky ones. They're the ones that benefit from it. They're the ones that begin to spend the money before prices have risen. And then other people, you or I, may not get that new money for 12 months or 18 months in the future. And at that point, prices have already risen, and our real wealth, the prices we pay, have gone up while our wages and salaries haven't changed, so our real wealth has fallen.
But let me understand, you're saying printing money, there's more money out there than there is demand, that's going to lead to a devaluing of the dollar that exists.
Yes.
But it seems like all the Fed is talking about now is a concern of deflation.
Yes, that's
It seems conflicting.
Yeah, that's just throwing everyone off the track. I mean, that started back in about 2002 when then Governor Bernanke gave a talk saying that we were very close to having deflation. We still had inflation at the time. Alan Greenspan picked this up a few months later and began to talk about not allowing inflation to get too low, below 1% per year or something like that. And so that has been used as a cover to continually increase the money supply. Let me just mention really quickly, from 2001 to 2005, the Fed, depending on what money supply figure you look at, increased the money supply by $2 trillion. That's $1 billion per day. This was the cause of the housing bubble and of the run-up of stock markets and so on.
So the question is, it seems like we've printed a lot of money, and I've seen on both sides, we're going to try to print our way out of this. Have we passed the point? Do you think are we past the tipping point where the only way to, I know you've talked about the gold standard. Do you think it's even possible? I know Ron Paul has talked about the gold standard, and he's very vocal about that. Is that the solution? And is that even really possible?
That's a long-run solution, but I think right now the Fed has to be brought under tighter rein. So I think auditing the Fed is a good step. Okay, finding out what did they pay for a lot of these bad assets? Was it much above the market price? Where did this money exactly go, and so on? And then number two, a second step is, look, take all taxes, capital gains taxes, sales taxes, and so on, off of gold and silver. So allow people a choice. So we'll still have the dollar, but if the dollar depreciates very quickly, people can shift. Also allow banks to offer Americans deposits denominated in foreign currencies like euro and yen. If they're more stable currencies and Americans want to use them, they'll have that choice. So just having a choice in currency, being able to shift out.
What do you mean having a choice in currency?
Just people can use gold and silver to settle their transactions.
Right now you can't use that. Right now the law is you can only, legal tender is just the dollar.
And repeal the legal tender laws, which would allow then contracts to be enforced in terms of gold, silver, yen deposits, euro deposits. Allow people to choose in what medium they want to make their contracts.
What makes, talking about gold, why is gold so valuable? Why is it more valuable than the dollar?
Well, so the question is not why it's more valuable, but why has it held its value over time vis-a-vis other goods? Much better than the dollar. Okay. Well, the reason is this. It's not subject to political whim. It can't be created out of thin air. You have to invest costs and resources in digging gold out of the ground. And so that's what has restrained governments in the 19th century, for example. So we actually had prices falling during the 19th century. Prices in 1896 were lower than they were in 1800. And during the period of our greatest growth after the Civil War, the 1880s, from 1880 to 1896, prices fell very gently. And yet we had a lot of economic growth because the government because we had no Federal Reserve, and you didn't have an agency that was printing money and manipulating interest rates.
Since 1913, when the Fed was established, how much has inflation gone up? What is the value of the dollar, or how has the value of the dollar gone down?
Well, think of it this way: as someone who had somebody who could buy a certain basket of goods in 1913. Now they're not exactly comparable, but let's assume for $1, it would cost about $22.50 to buy that same basket today. So the dollar is basically worth less than 5 cents of its 1913 value. It's lost 95% of its value.
And based on what we discussed, in simple terms, the main reason for that is the Fed printing more money, which has led to the money that you have being worth less.
Right. In other words,
that's why prices rise.
Right. The supply of money has increased much faster than the supply of goods. Whereas in the 19th century, the supply of goods increased faster than the supply of money, so you had generally falling prices.
So I want to bring this back to today, because the goal is to look for solutions, obviously. We're all in this together.
Right.
We're all in the same country, and we all want success, and we want to get out through this. The steps that should be done today, you think just repealing the legal tender laws, or what's realistic? What do you think is going to happen?
Well, that's
two separate questions.
Yeah. Well, so let's say, what do I think is going to happen? I don't think we're going to get much change unless we see a situation in which we get inflation breaking out in consumer prices.
Do you see another economic collapse in the near future?
Well, I mean, that's certainly a possibility. I don't want to be a Cassandra, but in a couple of years. Now, here's the thing: if we have consumer prices rising rapidly, that is that this new money gets into circulation and spent on consumer goods, and the Fed, not the Fed, but the government, the Bureau of Labor Statistics, fudges the CPI numbers. But let's assume that even that goes up. At that point, the Fed's going to either have to step on the brake and stop increasing money at such a quick, fast rate, in which case we'll have another recession, and the bubbles that are forming now will collapse, or, and this is more scary, they could resort to what Nixon did in 1971, putting on wage and price controls. And I am fearful of that. I do assign a small probability to that happening.
Well, from my understanding about wage and price controls, they just start a black market, and there's no way to control it when the costs are going to be based on supply and demand, and it can lead to hyperinflation, obviously.
The only regime that actually controlled black markets was Hitler, and in the Nazi regime, the penalty of avoiding the price controls was death.
We're going to go to a break. When we come back, we're going to kind of get into the Federal Reserve a little bit more and see if you think there's a better future without the Fed. And there's been a lot of conspiracy theories about what's going on with the Fed. I want to get your take on that because it's a black box that most people don't know about. And it's become in the news recently because of what's happened in 2008. And now everybody's very aware of how much power the Federal Reserve has. You're watching Lawline. Stay with us.
You had the best medical care, but still your baby was born 3 months early. March of Dimes research helps save babies from prematurity. For information or to lend a hand, visit marchofdimes.com. Let's find the answers together.
I teach NYC because every day it teaches me. Become a New York City public school teacher at teachnyc.net.
Hi, you're watching Lawline. I'm David Schnurman. Today's topic is on the Federal Reserve and what's going on in the economy right now. With us, we have Joseph Salerno, a professor at Pace University on economics. Before the break, we were talking about the Federal Reserve and what the future holds. Yes. My question to you is, do you think we're better off without a Federal Reserve in the future, and would that be the ideal type of way to go about things?
Yeah, I think we would be better off without a Federal Reserve. I mean, the Fed is simply a monopolist. It's a legal monopolist with the right to print money, the legal right to print money. Monopoly doesn't work. We know that. We know that with the U.S. Post Office, how terrible its service had been until FedEx began to really compete with it.
So it's a legal monopoly to print money?
Yes, it's a legal monopoly of the supply of money. So we have basically post office money or cable provider money. We know cable providers have their own little monopolies in each town. And service tends to be terrible under monopolists. Why should it be any different with the Federal Reserve?
So what's the alternative?
The alternative is, as I point out, a transitional alternative is choice in currency, in which you have competition from foreign currencies, that is, Americans using foreign currencies and gold and silver in their contracts.
So wasn't the counter argument to that, if you have too many currencies, before there was a Fed, you don't know the strength and the health of the currency.
Now, that may have been true when you had a period where there were many banks, but certain bank brand names did stand out, so they would be branded. But the difference here today, of course, is that there would be just a few. There would be the stronger currencies, such as the yen or the euro, that would be used as alternative currencies in the U.S. among businesses and others, and also gold and silver. So, I don't think you would have the problem with people, consumers, not knowing the value of these different currencies.
So is all the debt that we're in directly tied to the Fed?
I would say indirectly, but strongly tied to the Fed. Whenever there was wars breaking out under the gold standard, 1914 is a good example, almost all belligerent countries went off the gold standard. The reason why they did that was because if they raised taxes to pay for the war, the enormous cost of the war would
Sure.
reveal itself, and people would be extremely unhappy about that. So once you introduce paper money, it hides the costs of a lot of these government programs. And in that sense, having a Fed allows these huge deficits and this ballooning debt that we have.
Sure, and I've seen Ron Paul talk about this a lot, and it seems very logical, and it makes sense in what he's saying. So when I see that and it seems logical, I'm wondering what I'm missing. Is the powers that be, we're in the system too, and
Yes.
you need money in order to even become in politics. How do you change the system from within the system?
Well, that's a tough question. I mean, one way is through having politicians like Ron Paul, and there are very few of them, who are honest and do want to change the system. But I think his efforts are more educational. Okay, because once Americans change their minds about things, once they see the Fed as really a pickpocket who is stealing the value of their currency over time, I think at that point, pressure will come on to Congress to bring the Fed under its own control. And then maybe real changes can come about.
Well, I think when things start to have a direct effect, we start cutting human and health services,
yes.
That's when you realize that there is a consequence, I guess, directly to you. Look, when they raise the debt ceiling, they have to cut everywhere. Right. And of course, this isn't unique to the United States. If you look at every country, really, that's out there, they're having issues right now. And it's all, they're all tied, they all have central banks. And it's really tied to, I guess, what you call fiat currency?
Yes, fiat currency, that is a currency that can be created out of thin air.
Backed by
nothing. The paper and the ink to produce a $100 bill is something like, 3.5 cents or something. So the point is that you can just keep printing it.
And of course, it's not actually printing money anymore,
No,
it's all on computers.
It's all done with keystrokes. It's just in cyberspace.
So if you look at in the world economy right now, how does things like what's going on or with Greece, and where there's still a possibility they can default, and still other countries can default, how does that affect what's going on right now internally?
Well, I think it's a good object lesson. What we see is that this made-up fiat currency, the euro, is going to fall apart because some countries are much more profligate, spendthrifts. Greece, Ireland, Italy, and so on. And so what they're doing is they're bringing down the stronger countries that have more fiscal discipline, like Germany.
Do you think Greece is going to default?
Yeah. I really don't know, but I think at some point some of these countries are going to default. I don't think the Germans and others in this union, monetary union, are going to continue to bail out these countries because it's creating a moral hazard. If you bail one country out, then the others say, hey, you know what? Why do I have to practice fiscal discipline? Why do I have to cut spending? That's very painful. Okay.
So the question is, where is this tipping point? We just put more money into the system. It's almost the analogy I can think of. It's like a ball that you keep kicking forward. It's certainly everyone is aware that there's a lot of issues out there. I
think the breakdown of the euro may be the tipping point. It may cause people in the U.S. to take a good look at what's going on here. And I think we're much closer to a breakdown of the euro than we are to a breakdown in some sense in the U.S.
There's a lot of threats and realistic predictions that the U.S. will not be the reserve currency of the world anymore. How will that affect us? And what does that mean?
If that were to happen, what it would mean is that other nations, in particular China and Japan, will stop accepting our paper in exchange for sending us cheap goods and investing in our economy. When they do that, let's say that China gets rid of all of its reserves that its government holds in the form of paper dollars or claims on paper dollars. When they start selling U.S. currency, that means the value of our dollar is going to collapse. Our import prices are going to go up. You're not going to get any more good deals at Walmart and so on. Our imports are going to get a lot more expensive, and interest rates will go up.
So certainly, if there's a lot of dollars out there in Europe and Asia, certainly if it's not the reserve currency anymore, they don't want to hold it. They want to spend it.
Yeah, exactly.
And I assume the place they're going to spend it is right here at home.
The demand for money will drop. The demand for the dollar will drop, and when the demand for currency drops, it means that you spend it faster. And so that's what we're looking at.
And by spending money faster, because the value is dropping, certainly there's the term hyperinflation.
Yeah, that's lurking out there. Yes.
And where you want to spend it today before it goes down. And it's happened in many, and it happened in Brazil. Do you think that's a possibility in the United States?
I don't think it's. I mean, I think central bankers in the U.S. and politicians and so on have learned the lesson of hyperinflation. I think more likely than that is what I mentioned before, that as we start to get to that point, we'll have weight and price controls.
In the last 2 minutes, what can the individual watching right now do to prepare for this? Can they do any? You know, I feel so helpless. You know, we can't really affect it. What can we do specifically to protect ourselves?
Well, you know, as Ludwig von Mises, the great Austrian economist, put it, we're all on the same ship together. We're all part of society, and we're in the economy. If the monetary system is going to go down, it's going to break up the division of labor. That is all specialization and the high productivity that we have. So we're all going to go down with it. I mean, you can protect yourself in the short run, maybe with gold and so on. But in the long run, if the economy breaks down, society will follow very quickly. So I think educational efforts is where the individual should devote himself to, educating himself about what's going on, and then forming opinions of others, helping influence others.
And unfortunately, the time is up for the show, but there's clearly another opinion on the side, and that's the Friedman, where to print more money to get out of this, and so there's a lot of areas to educate yourself, and I think the best thing to do is to have the conversation. I feel like in the media, the conversation's not even really being had. It's just a bunch of talking points. Would you agree?
I agree with that, and I think, but it's starting. I think Ron Paul has started the ball rolling, and other congressmen have picked up on it, and other media commentators have picked up on it.
And hopefully you coming on today's show and talking a little bit more about it and getting into detail will help the conversation going. Thank you very much for being on today's show, and thank you for watching. If you have any questions or comments, this will be online as well. Look forward to seeing you next week.
You've been watching Lawline with your host, David Schnurman. Mr. Schnurman will be back with you next week at the same time. If you have any questions about this week's program, please send an email to info@lawline.com.